about stocks this week. Markets are range bound, but they end in the red as the Sensex loses 200 points on Friday. We'll figure out what your investment strategy should be. The oil sector is in focus this week. We have a lot of news around that sector. We'll tell you what you should be doing with your oil and gas stocks. And we'll review Prakash Devan's portfolio and talk about stocks like Oriental Bank of Commerce, Tata Steel and Tech Mahindra. Welcome to All About Stocks. You're watching ET Now. Thank you for tuning in. This is a show for long-term retail investors. On this show, we take apart the stock market for the week, find out what your investment strategy should be, and of course find stocks that you should be investing in. Now remember, all of the calls you hear on this show are for a 3 to 4 year horizon at least. These are not short-term trading calls. Now we know the Sensex ended down 3% this week, but the market does seem buoyant with the recovering rupee and generally the mood that we have seen the bottom of the market and things are going to turn around from here. Now over the next half an hour, we're going to tell you if that is in fact true and what you should be doing with your stocks portfolio to profit from any change we might see in the market. Now remember, there's an email ID at the bottom of your screen where you can send in any question you have right now about your stocks. Before we go any further, let me bring in Ajay, who has an update on how the markets performed this week. Ajay, what are you reading into those September series numbers?
Well, Faye, that's correct. It has been a week of profit booking as far as Indian markets are concerned. So about 3% cut on the benchmark indices, about 7% cut on the banks. But the point to bear in mind is that we have risen so sharply this series. In fact, the series which expired this Thursday, the September series, has been the first or the best in almost 1.5 years. We have actually gained around 8-9% on the Nifty, 13% on the Bank Nifty. So some profit booking was understandable. However, from here on, the way FIIs have continuously been buying, the speed at which rupee has recovered from its lows, the bias still remains slightly on the higher side, and we may actually start negotiating higher levels, our previous highs of around 6,200 in the next few days. Global market, or the liquidity in the global market, has been quite supportive ever since the Fed has delayed its plan to taper the QE program. The liquidity is quite benign for emerging markets, and India has benefited from that particular phenomena. The point to take into account is that probably because of all of this and this sharp movement, the base of the Nifty or the markets may have moved a little higher. So traders or investors acting in the market should keep in mind that probably the 5100 kind of lows which you earlier saw may not come this time round. The new Nifty range which the traders are talking about is around 5500 on the lower side and 58 to 5900, maximum 6000 on the upper side. Also to take into account that second quarter earnings season could be triggering some profit booking because they are expected to be extremely weak, largely all the sectors. So one should trade with that kind of view in mind from here on.
Well, Ajay, let's also talk about the oil sector. We saw a lot of news come up around this sector, especially on this channel. Give us an update on what's going on with that sector and why it's in focus and what we expect will take place over the next 15 odd days.
Well, Faye, the news flow and activity, even trading activity in oil sector was quite heightened this particular week. There were wild moves coming in on each of the stocks. Most of the oil marketing stocks were in focus this time around. So on the one hand, crude prices have eased quite sharply. Rupee has strengthened, giving a lot of impetus to oil stocks. There was an overhang of changing the way fuel pricing is calculated from trade parity pricing to export parity pricing. So that was a big overhang as far as oil marketing companies are concerned. At the same time, ET Now exclusively learned that there is the proposal of hiking diesel prices from the current 50 paisa a month to 1 to 2 rupees a litre a month. That would be leading to much higher levels in oil marketing stocks if actually announced. So trade with a positive bias in oil marketing companies because the rupee is on its recovery, crude prices are weak. That's what the traders on the street are saying. Reliance Industries also played its own part on the both side, giving ample opportunities to traders. Mainly, about comments coming from the company that till the natural gas pricing mechanism is completely fixed, they would not go ahead, and in fact they would stall their $10 billion worth of upstream investments. Oil Minister, on the other hand, have clarified that there is no confusion about the gas price hike. In fact, the decision of hiking prices from 2014 April onwards is permanent. So this bears as well as the bulls to trade on both sides, and probably the news flow around this sector will remain quite active for the next fortnight or so. So keep an eye on that one too.
All right, Ajay, thank you so much for that update. Joining us today is Prakash Diwan, the director at Altamount Capital Management. Prakash, thank you so much for joining us.
Right.
Like Ajay was telling us, we've had a good September series expiry. There seems to be an impression that perhaps the market has bottomed out and we're going to see it turn around and go up further. But do you think this period of volatility is behind us?
I am afraid not so. Though we would love to see a situation where there's very little volatility, there's a bottoming out in the markets, and it's kind of ripe for a U-turn of sorts. But unfortunately, we still have certain macro parameters that need a lot of mending. While things have started kind of stabilizing on the currency front, but we still have high inflation, peaking interest rates. So there are lots of macros which are yet to settle down. So I wouldn't really say we've bottomed out already in the markets.
Well, what would you say should be our approach to this market at this point then? Should we be cautious? Is it a good time for long-term investors to consider buying stock? What's your advice? What are you telling your clients at this point?
Faye, what's happened is while we did see a bout of interest come in the month of September, early part of September, people have bought into some of the stocks with a more longer term horizon, of course. But some of these stocks have seen very sharp run-ups. You would have noticed, there's stocks which are delivering 20% and upwards. So I would believe if you're lucky enough to have bought into markets at that level and you have those kind of profits, you should take some profits off the table. But if you were to look at fresh investments, maybe it's a bit too early to get into bottom fishing. You would probably get better times in the month of October, particularly the second half of October could be where you could start finding some real good values available in the markets on stocks which you like.
Prakash, I want to ask you about two specific sectors. When we talked some time ago, you advised our viewers to stay away from infrastructure and real estate entirely. Do you still say that there are some sectors in this market that we should completely steer clear of?
Yeah, I would believe in addition to those two, I would also put banking at this point in time to be away from, because there are a lot of structural adjustments which are not so favorable for most of the banks on a price action basis. While in the long run banks could deliver great results, but at this point in time I don't think we've reached the bottom there. So you have to stay away from these sectors, but there are other sectors that are emerging as more promising.
Well, obviously I'm going to ask you to name these sectors now that you say are more promising, and tell us what stocks within those sectors you find value in right now.
Sure, look at IT. I mean, the way IT has kind of been on the sidelines, it's offering still some good value. It hasn't run up yet. Some good options within the IT space, mid-cap companies, large-cap companies. So specifically, you got a Tech Mahindra, you got a KPIT Cummins with a very unique business model, Persistent Systems, Mindtree. These are companies that will continue to grow, and I'm not banking on the rupee weakness to shore up their bottom lines. It's real traction that's happening given the strong numbers Accenture has come up with and some of the IT majors in the US are clocking. The other sector to look at would be a contra bet on cement. I think cement is kind of bottomed out. There's consolidation that's happened, which is healthy. So look at an Ambuja, look at an Ultratech. These could deliver great long-term value for people who buy in. And selectively, maybe an auto company like an Mahindra & Mahindra, which is just kind of ripe for a big re-rating of sorts once things start looking up on the sales numbers particularly.
Prakash, when we talked in May this year, you talked about the fact that a good monsoon would mean a lot to this market. There is an agreement now that we've actually seen a good monsoon this year. Where do you see this monsoon impacting our market? What stocks do you think will benefit from the monsoon the most?
Monsoon typically has this transmission effect where earnings and more money in the hands of the rural folks would start leading to a little bit of a revival of the consumption cycle, and typically that tends to percolate down to two-wheelers on an immediate basis. You could also have some white goods particularly benefiting out of that. You could have some of the FMCG spends going up a bit more liberally. So these are sectors that should see, and you look at the way a Bata or a VIP or a Hero MotoCorp, the likes of TVS, they've started kind of seeing some sort of momentum. I think it's still a bit early, but come festive season and you could probably start seeing a very good impact of the positive monsoon outcome on the stocks that we mentioned.
In fact, we have a couple of questions from the oil and gas sector. Sankoth has written in, he has 100 shares of RIL, which he bought at 860 rupees. He wants to know if he should hold on to that stock. What's your call on RIL at this point?
See, structurally, yes, Reliance is a great long-term story. There's no doubt about that. But the news flow does tend to kind of impact it on a sentimental basis, and we've seen these are opportunities to nibble into the stock for the long-term investor. And mind you, it's the only company that could probably offer great value in these tight liquidity conditions, a weak rupee status. So all of these negatives are actually favorable for the company because it's cash rich, it exports predominant output that it produces, and it's likely to get into telecom at a time where telecom is also turning out to be profitable. So I see a great structural story, and he should hold on to, probably add on at lower levels if he has the gumption.
All right, it's time for us to take a look at a portfolio in our rapid fire round. Rajiv Pradhan has written in and he has these stocks in his portfolio, Prakash. He wants to know which of these he should hold on to. Right on top, he has 2 pharma stocks, 200 shares of Alembic Pharma, bought at 100 rupees. What would you recommend he does with this stock?
Oh, he has to continue holding. It's in a great phase, no complaints, just keep holding and you'll get rewarded.
Well, the next stock on his list, I know you personally have been recommending, is Sun Pharma, which he bought at 425 rupees. Now, the stock hit 590, almost 589 this week on hopes of higher sales of its cancer drug. What's your call on Sun Pharma? Should he be holding on to that stock?
Absolutely. I mean, I think it's one of the bluest of blue chips in the pharma space. So you have a defensive sector and the best pick out there. Valuations that he's gotten are fairly attractive, very intelligent way of investing. Continue holding and get rewarded.
He also has Petronet LNG in his portfolio, the stock that he bought at 151 rupees. Now, Prakash, you and I have talked about this stock several times over the last couple of years. The fundamentals seem really promising, but somehow the stock has not reacted in that manner. How much longer is he going to have to wait for Petronet LNG to recover?
If you ask me, it's linked to a lot of decision making on the side of the government, and that could probably start happening once a new government, in whatever form, comes into force, and that means you'll have to tie it up with the forthcoming elections for the Lok Sabha, and that could be another 6 months. But as and when that happens, I think it'll be in an acceleration, and it'll catch up with all the lost time. So hold on and wait for the good times once the political scenario improves a bit.
All right, last stock on his list, Yes Bank, bought at 451 rupees. The stock ended the week at 304. Of all of the banking stocks, what's your call on Yes Bank?
I said we could avoid buying into banking afresh, but if he's already bought it at higher levels, this is one bank that could kind of bounce back quickly, and he could probably move out at that point or reevaluate at that point. So I would suggest book a loss at this point for Yes Bank particularly, because it's not one of the weaker ones out of the banking lot. So while he's down from his much below his acquisition price, continue holding, wait for some better times.
All right, we're going to take a very quick break. When we come back, we're going to review Prakash's own portfolio and give you the list of stocks he's recommended for us. We'll also take a closer look at the auto sector. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Prakash Devan is still with us, helping us figure out our strategy for our long-term portfolios. It's time to take a look at Prakash's own portfolio. Now, Prakash designed a portfolio for us on the 30th of November last year, and we've been tracking that portfolio. It will be 1 year old fairly soon, in a couple of months. It's currently at an overall loss of 8.33%. Let's compare it to the Nifty. The Nifty is down about about 0.5% around that same period. I'm going to give you a list of the stocks that Prakash has recommended for us. There's Oriental Bank of Commerce. It's lost nearly half its value since we bought that stock. Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC and M&M. Now, Prakash, when we talked about Oriental Bank of Commerce last time, you seemed fairly optimistic that if there is a rate cut, that this stock would recover. We haven't seen that rate cut happen. How long do you think we're going to have to wait for Oriental Bank of Commerce now?
No, but if you look at some of the recent moves that the bank has made, we saw it move from those 116.20 levels to almost like 180 very quickly, and then of course the run up was sharp, and the pullback has been also equally severe. So as I said, banking is a sector that's going through its throes of restructuring and re-energizing itself. So I would give it another quarter or two to come back into the fair value that we would expect. So that would happen, and of course interest rates are not in a position to get softened very easily right now as things seem, but as and when that happens in the next couple of quarters, I'm sure Oriental Bank of Commerce gives us what we expected out of it.
But we also talked about Tata Steel, and you were fairly positive of some sort of a recovery from that company and the fact that it has such strong pedigree. Are you still positive about Tata Steel right now?
I am because that's a company that's kind of utilizing the slowdown to recharge itself, get into very focused areas, high margin areas, which traditionally it's not been very good at, and I think the kind of efficiencies that it's building for itself will pay up once you see a little bit of an uptick in the global markets, and the demand for steel could come up anytime very sharply once China and the US starts showing some signs of a recovery. So I would still have my faith restored in this.
All right, so no changes there on Prakash's portfolio. I'm going to give you a quick recap of the stocks on this portfolio. There's OBC, the Oriental Bank of Commerce, Tata Steel, Tech Mahindra, Kane, Cipla, Coal India, ITC and M&M. We're just going to take a few questions right now. We have a question on Mahindra & Mahindra. Incidentally, Nikhil has written in 200 shares of the company bought at 880 rupees. He wants to know if he should hold on to that stock. Now, we heard M&M plans to launch 3 or 4 new platforms over the next 3 years. And also, like Prakash was telling us, those good monsoons, of course, will increase demand on tractors. But before we answer this question, I want to bring in my colleague Ajay to give us a wrap on the auto sector. We've heard a lot of news in that sector. There seems to be a lot of interest in the sector as well. We're going to tell you why. Ajay.
Well, despite a profit booking emerging on overall larger market this week, auto stocks were trading with positive bias on most days. Tata Motors, Mahindra have even announced price hikes this time round, and analysts are saying that inventory build-up concerns which was plaguing the sector are now easing and perhaps was overstated. In fact, some of the dealers progressing into the festive season may start increasing the inventories once again. Most of the analysts are also indicating positive bias towards commercial vehicle stocks like Eicher, Escorts and Ashok Leyland, because another stimulus for this particular sector, buzz is resurfacing, giving a lot of cushion to this particular part of the market. Also, analysts say that the second quarter numbers could actually spring surprise in the form of better cost efficiencies and margin management as far as some of the auto stocks are concerned. So one should trade with a positive bias even in these other stocks going forward.
All right, Ajay, thank you for that update. Prakash, M&M bought at 880 rupees for nickel. Would you recommend he holds on to it?
Absolutely. I mean, I probably think this is one of the best stocks to buy into the sector that's robust enough, but is going through a little bit of a temporary slowdown on numbers for some of the players. M&M doesn't have to worry much. Tractors, two-wheelers, utility vehicles, you name it, and they're there. And it's a company which has a very strong diversification also in its portfolio vis-a-vis the other businesses that contribute to this particular stock. So you can look at about 1100 in a few months from now, and he'll definitely be smiling his way to the bank.
Well, while we're on the topic, I want to take a couple of more questions that have come in on the sector. Prerna Kulkarni has written in 50 shares of Maruti Suzuki bought at 1,665. Should she hold on to that stock? The stock ended the week at 1366. Now, reports suggest the company is likely to raise car prices by about 10,000 rupees in October. But Prakash, the last time we spoke, I think this was in June or July, when you said that you are currently more bullish on commercial vehicles and you would like our viewers to avoid Maruti altogether. Is that the advice you'll give Prerna as well right now?
I think so. I would stick with that. And when I said commercial, it's more light commercial vehicles, utility vehicles, which are doing well, not the trucks and the heavy commercial vehicles. And Maruti is in that space where, you know, it's a lot of discretionary spend, which could see some entry-level sales, car sales, but not necessarily, you know, the entire portfolio getting rejuvenated. And it has a huge sell-off that keeps on coming at about those 1500 levels. So it's difficult for Prerna to get her level at this point in time, but she could probably bide some more time, but not do much about buying more of the stock.
Well, Venkatesh has also written in. He has 100 shares of Tata Motors, which he bought at 239 rupees. Should he hold on to that stock?
I think this is a great company, no doubt, but it will have its ups and downs given the cyclical nature of JLR sales, and it's a global play which takes time for us to kind of get an impact to be felt on. And I would suggest more specifically he books his profit at this level, buys into an M&M for the time being, because vis-a-vis Tata Motors, M&M offers a much faster, much definitive upside. But Tata Motors definitely is a good stock, so he could take money out but get into M&M for the time being.
All right, it's time for a very quick break. When we come back, we're going to talk about National Peroxide, Sun TV and HPCL. Don't go anywhere. Welcome back to watching All About Stocks on ET Now. Thank you for staying with us. Prakash Diwan is with us as well, helping us make money in the long term. Prakash, thank you for staying with us. It's time to look at your report card. You recommended National Peroxide in September last year when it was trading at 514 rupees with a target of 600 rupees. That stock is currently at 373. What would you recommend our viewers do right now if they bought it at that point when you recommended?
Well, since it didn't attain that 600 level but actually moved up and retraced from there, given the kind of carnage we saw in these illiquid mid caps, I would believe it's still prudent to stay and hold on to it. Probably if the people are with a longer term orientation, they could probably average out at current levels, and that makes it easier for them to get in the money as soon as there's a quick recovery of sorts in that entire business stream.
All right, it's time to take a look at one of our viewers' queries again. Now, this is a portfolio. We'll take it in our rapid fire round. Arun has written in. He has the following stocks in his portfolio. Now, he tells us he's a long-term investor. He wants to know which of these shares he should hold on to. 25 shares of Sun TV, bought at 385 rupees. What's your recommendation on Sun TV?
He could hold on. He could hold on. There are better times ahead for all these operators, and the digitization process will also help Sun TV significantly. It's a great time, pre-election year, good spends, be invested.
He also has 100 shares of HPCL, which he bought at 182 rupees. Now, the diesel price hike has been deferred, but we've heard news on deregulation that might be very positive for this stock. Would you recommend he holds on to it?
Yes, I think so, because he's not too far away from where he's bought in. I mean, relatively, at least, given what could happen in these markets, and the diesel price, the deregulation announcement could be extremely positive for the entire sector, particularly for HPCL as well.
75 shares of Godrej Industries bought at 226 rupees. What's your recommendation?
Wow, I mean, great company to be into. It's a defensive space, one of the fastest growing companies within that space, well governed, and I think he absolutely has nothing to complain being invested.
He also has Dabur, Prakash, which he bought at 155. Hold on to that stock as well?
I guess so. It's a good means of diversification. He's not got all money on FMCG into one counter, and Dabur also is one of the promising ones, undervalued relatively to the larger ones. Definitely should stay invested.
All right, unfortunately, we've run out of time on this show. Remember, you can send in any question you have about your stocks to the email ID at the screen. You can also, of course, send in your entire portfolio. It'll be our pleasure to look at it on the show. Prakash, thank you so much for spending time with us on All About Stocks this week. It's a pleasure to chat with you. You'll find a copy of this show on our Facebook page, and you can also reach me personally on Twitter. Thanks for watching.